Hello everyone and welcome back to our channel. In today's video, we're diving into a topic that has the potential to revolutionize your financial life: living off dividend investing. Now, you might be wondering why this topic is so crucial. Well, in an era of economic uncertainty, having a steady stream of passive income can provide much needed financial stability. That's where dividend investing comes in. Essentially, it's an investment strategy that focuses on buying stocks of companies that pay out dividends. These are portions of a company's earnings distributed to shareholders. So, if you're looking for a way to earn passive income or even potentially achieve financial independence, this video is for you. We'll be exploring what dividend investing is, how to get started, how to build a dividend portfolio, and what life can look like when living off dividends. We'll also touch on the risks and challenges involved in this investment strategy. So, sit back, grab a notebook, and let's get started on your fast track to living off dividend investing. Let's start by breaking down the basics. Dividends are essentially a portion of a company's earnings that are distributed to shareholders. Think of it like this: if you own a piece of a pie, in this case the pie being the company, you get to enjoy a slice of its profits. That's what dividends are, your slice of pie. Now, dividend investing is an investment strategy that focuses on buying shares in companies that regularly pay out these dividends. The beauty of this strategy is that it allows you to earn money simply by holding onto the stock, creating a steady stream of income separate from any potential capital gains from selling the stock at a higher price. Dividends play a significant role in the investment world. They can contribute to an investor's overall returns and provide a cushion during market downturns. One of the main attractions of dividend investing is the prospect of receiving regular payments from your investments. It's like having a tenant who pays rent for living in your property, except in this case, the tenant is your stock and the rent is the dividend payment. So how do companies decide to pay dividends? There are several factors at play here. These may include the company's financial health, its need for reinvestment, industry norms, and the company's history of paying dividends. Typically, well-established companies with steady cash flows are more likely to pay dividends. Think big names in utilities, consumer goods, or real estate sectors. In a nutshell, dividend investing can offer a way to generate a consistent income while potentially growing your investment over time. But as with any investment, it's essential to understand what you're getting into, which leads us to our next segment, getting started with dividend investing. Now that we've covered the basics, let's talk about how to get started with dividend investing. The first step in any investment journey is planning. You need to have a clear understanding of your financial situation, your investment goals, and your risk tolerance. Are you looking for a secondary income source? Do you want to save for retirement? Or perhaps you're aiming for financial independence? Having clear objectives can guide your investment decisions. One common question is, how much money do I need to start dividend investing? Well, it depends on your income goals. Let's say you want to generate $3,200 per month from dividends alone. If you invest in stocks with an average dividend yield of 4%, you would need an initial capital of around $960,000. This might sound like a lot, but remember, dividend investing is often a long-term game involving consistent investing and compounding returns. Speaking of dividend yield, this is a crucial concept in dividend investing. It's a ratio that shows how much a company pays out in dividends each year relative to its stock price. In simple terms, if you buy a stock for $100 and it pays out $4 in dividends over a year, the dividend yield is 4%. This percentage gives you an idea of the income you can expect from your investment. As for where to buy these dividend stocks, there are plenty of platforms available today. Some popular ones include Robinhood, Fidelity, and Charles Schwab. Each platform has its unique features and benefits, so it's worth taking the time to research and choose one that best fits your needs. Remember, dividend investing isn't a get-rich-quick scheme. It requires patience, diligence, and a good understanding of the market. But with careful planning and execution, it can become a reliable source of passive income. Now, let's move on to building a robust dividend portfolio. Building a robust dividend portfolio is an integral part of dividend investing. A well-constructed portfolio can provide you with a steady stream of income and also help mitigate investment risks. Diversification is the key here. It's the old saying, don't put all your eggs in one basket. By spreading your investments across different sectors, industries, and even geographical locations, you can reduce the risk of a single company or sector impacting your overall returns. So, how do you choose the right dividend stocks? Here are some tips. Look at the company's financial health. A financially healthy company is more likely to pay out consistent dividends. Check out the company's balance sheet, income sheet, and cash flow statement to get an idea of its financial standing. Consider the payout ratio. This is the percentage of earnings a company pays out as dividends. A lower payout ratio could mean the company has room to grow its dividends in the future. Check the dividend history. Has the company consistently paid out dividends over the years? Companies with a strong track record are often a good bet. Evaluate potential growth. While past performance is important, you should also consider the company's future prospects. Look at its business model, market position, and growth strategies. Finally, let's talk about the power of reinvesting dividends. Instead of taking the dividends as cash, you reinvest them to buy more shares. This can significantly boost your earnings over time thanks to the magic of compound growth, earning returns not just on your original investment, but also on the returns that investment has generated. Building a dividend portfolio is a journey, not a destination. It requires regular review and adjustments based on market conditions and your financial goals. But with patience and diligence, you can create a portfolio that provides a reliable income stream and helps you achieve your financial objectives. Living off dividends might seem like a dream, but it's a reality for many investors. So, what does this life look like? It's a life where your investments work for you, generating a steady income stream that covers your expenses. Let's delve into some numbers to illustrate this. According to Simply Safe Dividends, if you wish to generate an annual dividend income of $50,000, you would need to invest between $1.1 million and $1.4 million in dividend-paying stocks, assuming an average yield of 3.5% to 4.5%. This kind of financial independence can bring significant lifestyle changes. You could have the freedom to retire early, travel more, or pursue passion projects without worrying about your next paycheck. Take the example of Tom and Susan, who were featured on Wealth 45. They built a diversified portfolio of high-yield dividend stocks over several decades. Today, they're enjoying their golden years, traveling the world funded by the dividends from their investments. Their strategy was simple: start investing early, consistently add to the portfolio, reinvest dividends, and focus on companies with a strong track record of paying dividends. Another inspiring story is that of John and Jane Doe on Vital Dollar. They invested heavily in dividend-paying stocks and mutual funds, focusing on those with a strong history of paying dividends. Now, their portfolio generates enough income to cover their living expenses, allowing them to retire comfortably. Living off dividends isn't for everyone. It requires a significant upfront investment and a long-term commitment. But these stories show that with careful planning, patience, and discipline, it's possible to create a reliable income stream through dividend investing and potentially achieve financial independence. We hope you found this video insightful and it has sparked your interest in dividend investing. We invite you to engage with us by leaving your comments and questions below. We promise to respond to as many as we can, either directly in the comments or in our future videos. If you're looking for more in-depth information about investing and financial freedom, we recommend checking out our other videos or playlists on this channel. They're packed with valuable insights to help you on your financial journey. If you found this video helpful, please give it a thumbs up. Sharing is caring, so don't hesitate to share this video with friends who might also be interested in learning about dividend investing. And most importantly, don't forget to hit the subscribe button. By subscribing, you'll stay updated with our latest content and become part of our growing community of savvy investors. Let's navigate the path to financial freedom together.